powerful tutor. Today, video, we're going to still see more illustrations that are done under double entry via the principles. And these are some of the transactions that are most confusing to learners. Learners find it difficult to post such transactions using the ledger, and that is why I'm here to give more clarity to such transactions. Let's go without wasting time. On this day, which is goods returned to ABC Limited worth 2,000 naira. Here we are saying that debit the receiver account and create the giver account. I'm still emphasizing the principle because it is a key that all learners will hold to be able to post any transaction on the surface of the earth, provided you understand the principle. So we are saying goods returned to ABC Limited worth 2,000. Who is the giver account, or what is the giver account? The giver account here means returns out. The goods return. That means goods are returned out. And when goods are returned out, in accounting, we call it returns outwards. Return outwards account, as goods are being returned out. Then if goods are being returned out to who? Return out to ABC Limited. You can recall that we bought goods from ABC Limited in my previous illustrations where goods were purchased on credit. So in this case, ABC Limited become the giver account, become the receiver account, because goods have been returned out. So goods returned here means return outward, while ABC become the receiver account. Then let's look at how we post it now. Now say return outward here is a giver account, means the business is giving out goods and it becomes the giver account. Then on this faithful day, 12th of April 26, return outward is a giver account, is giving goods to ABC Limited, which we bought goods from, if you watch the previous video, worth 2,000. Then in the next account, which is the receiver account, which is ABC Limited, is receiving goods that were returned out by the business worth 2,000 on the 12th April 2026, 2,000. Then this become the receiver account. Then next, here on the 13th of April 2026, goods returned by Mr. Ondaka worth 3,000. Here we are looking at a situation whereby goods have been returned by the people that the business sold goods to. So in this case, goods returned here by. This by means return inward. Like here to means return outward. Goods returned to means return outward. Goods returned by means return inward. That's returned by customers or returned by the people that the business sold goods to them. So here, anywhere you see return goods to, that means return outwards. Return goods by mostly means return inward. That is, these are the prepositions that qualify it. So in this case, goods returned by means return inward. By who? By Mr. Mr. Ondina. So here, the account that received become the return inward, because goods have been returned by Ondina, then they have been received. Then that become the receiver account. Then who is giving the goods? Mr. Ondina is giving the goods, but today become the giver account. Let's see how we record this. They come here and said, Mr. Ondina now is a giver account, giving goods back to the business, which we call it return inward, worth 3,000. They now come to return inward account, which is the receiver account. On this faithful day, 13th of April 26, they return inward, which is the business that is returning goods back from who? From Mr. Ondina, 3,000. The giver account here we are saying is Ondina, the receiver account is return what? Inward. The next transaction here we now say took a loan from the bank, 100,000. These are some of the transactions that are most confusing to learners, but we are still going to make it very clear so that anytime you see them, you'll be able to address them without any issue. So here we now say took a loan from the bank. Who is giving? Here to identify the giver account and the receiver account. The giver account here means loan. The business need loan. So as the business need loan, that means the bank will give loan to the business. But the giver account is not really bank, as the case may be. What is giving the business is loan. The business is receiving loan. The loan is the giver account, though it's through the bank, but the emphasis is loan. Loan is the giver, and loan is a liability. I want to emphasize that all liabilities in accounting are credited. All liabilities are givers, because somebody must give you something that you might not pay. Someone might give you a loan that you're expected to pay. So givers are credited, which are liabilities in accounting. So in this case, loan become the giver account, and then bank is not the bank is just giving the loan, but the emphasis is the Because if you need a loan and you approach a bank or anybody give a loan, the person will give the loan by cash. Even if it's by check, emphasis that you're needing cash, you will certainly transfer it to cash. So we now conclude that the loan has been received by cash. Let's see how we post it. Here, as you can see, loan is a giver account, giving cash to the business. What? 100, meaning the business need cash, and then loan is given to cash 100. If you like, and say bank loan, no issue. Bank loan, but for professionality of accounting, just say loan. All we know that the loan is given to the business, or the business receiving loan. The loan is the giver. Then, by what means the business receiving the loan? By cash. They now look at cash account here. Now say cash is receiving from loan, or you can say bank loan is still correct, and the amount is 100,000. Loan become the giver account, cash become the receiver account. Mind you, I say that loan is a liability, and all liabilities in accounting are credited. Take it or leave it. Then let's continue. Then here we are saying we drew cash of 10,000 from the business. Here, mind you, for private use. Emphasis here is for private use. You are taking cash from the business. The who is the giver account and which one is the receiver account. The giver account here is cash, meaning cash has been taken out of the business. As cash is taken out of the business, cash becomes the giver. The giver is what you give, and the business is giving out cash. But this time around is to the owner of the business. And the owner of the business, here they discuss personal use. So personal use in accounting is what is qualified to call drawing. That is, when the owner takes money from the business, it's called drawing. The concept that back this out is called business entity concept. Business entity concept says the owner is different from the business. So if the owner takes something with the business, you need to record it. And then if the owner take money from the business, it's drawing. But if the owner put money to the business, it's called capital. So here, personal use means drawing. So drawing becomes the receiver account, cash becomes the giver account. Let's see how we record it. We now say that on the 15th of April 26, cash is given to drawing, which we say is personal use. And then 10,000. Then I come and open drawing account, which is the receiver account. The drawing here stands for the person, which stands for the owner. The account of the owner. The owner is receiving cash for the business worth 10,000. Mind you, in some cases, this personal use might not be called personal use. The names of those things will be mentioned. For example, somebody will not say, we drew money from the business to buy a private car, or we drew money from the business to pay the school fees for the children, or we drew money from the business to buy clothes or anything that is personal. So whether personal use is used or not, anything that is private, that is not for the business, is drawings. Is drawing, take note. And that is why we are using drawing. Let's go to the next one. Here we say we drew goods from the business 5,000 for still private use. Now you are clear. I will not emphasize, because anywhere you see private use, you know that it's drawings. But the difference is that the business is not taking cash again. It's taking goods. It's taking goods. So if the business is taking goods, mind you, you are not going to open goods account. There's nothing like goods account. If you open goods account, you pay paid. Just like when we say bought goods, you don't open goods account, but purchases. Sold goods, you don't open goods account, we open sales account. So here too, if we withdraw goods from the business, we are not going to open goods account. Rather, the goods have been taken from purchases, because the business purchase goes to use. So if the business take goods out of the business for private use, it means it's taken out of the drawings. Sorry, it's taken out of the purchases that was made. Then the purchase will reduce certainly. So here, I want to emphasize this is the only exceptional case whereby purchases is credited. Mind you, I told you in the previous video that all purchases are debited by receivers. But this is an exceptional case whereby purchases is given because the goods that were available for sale are now taken out by the owner for private use. So in this case, you credit your purchases account. Let's see how we do it. Here we are saying purchases is a giver account, right? The goods available that are all debited for sales, for sales, they are now being taken out for private use. Then private use says drawing. Then now purchase become the giver account. Now say purchases is given to drawing that the value of the goods worth 5,000. They now come to the same drawings account, which is the receiver account. That is what This is the owner account I want to emphasize. You mean the owner, which is represented by drawing, is receiving goods which are referred to as purchases worth what? 5,000. These entries are most confusing to learn out, especially beginners in accounting. Even some people that are higher in accounting find it difficult to record this principle. Try and follow me out for more details on double entries and bring out the salient features of transactions that are most confusing in accounting, and then you follow. If you have any challenge, ask a question in the comment section. I'll come back to address them. Thank you all.